Good morning, and welcome to the 12th Annual State of the Treasury Profession Message. I can't believe we've been doing this for 12 years, my goodness. I'm Kathy Gregg. I'm a Managing Director at Novantas and Treasury Strategies, a division of Novantas, and I'm joined here this morning by my partner, Tony Carfang, who's also an MD and one of the heads of Treasury Strategies. We've chosen as, logistics, sorry. Everybody that's joined this call today will, after the call's over, receive a copy of the deck and a link to a recording of the presentation. And also, if at any time you have a question you want to submit to us, you're welcome to use the bottom right-hand corner box to do that. We'll answer all questions after the webinar and send the answers out to everybody. We've chosen as our theme for today, Back to the Future. And anybody that recognizes this car here is probably somebody that was born before the mid-90s. This car actually, if you recognize it and reflexively associate it with Back to the Future. Back to the Future was a mid-80s movie that used this car as the time machine. This beautiful stainless steel DeLorean was the time machine in the car. And we're using Back to the Future as our theme this year for the State of the Profession message because it kind of feels like Back to the Future. We've got interest rates again, which we haven't seen for a while. And we've got rate increases, well, at least in North America, maybe not in Europe today, but we're having them in the U.S. We've got a tax holiday. We haven't had a tax holiday since 2004. And we might even get some inflation one of these years. I mean, it's starting to feel like the old Treasury world again. So back to the future. What we're going to talk about today, our agenda, will be in three areas. First, we're going to cover what's on the Treasurer's mind for this year. Then, Tony's going to talk about a select group of current market trends that are probably going to make our lives interesting this year. And finally, we'll conclude with a discussion of Treasury's strategic focus for 2018. But first, like we often want to do in this session, we want to go back over our sort of predictions or prognostications for the last several years, pat ourselves on the back for being right. When I look back at these are some of our themes. Going back to like 2012, 2013, 2014, we weren't very optimistic in like the 2012 era. We were like, are we there yet? We are so tired of this recession. When is it going to be over? We thought it would be done by now. And then we thought we were turning the corner, and maybe we were, maybe we weren't. It was sort of tough to predict. And then we really did start to become more optimistic about Treasury in particular, charting your destiny, carpe diem, and finally getting to the point of where we thought, wow, we're finally through this, we're getting some resources, we're getting some traction again, doing more with more. And the state of the profession we see for 2018, very good. It's going to be an interesting year. It's going to be a fun year to be in Treasury. We're going to have some new challenges. That's always keeps us going in Treasury, and opportunities for some really, I think, major strategic impact on our organizations. So very good prediction for the year. As we normally do, we start out by surveying several hundred companies to find out what their Treasury priorities are for the year. And then we follow up with some in-person interviews to get more detailed color commentary from treasurers. And what I've got here on this slide is our top 5 priorities as reported by several hundred treasurers for the year. And as you can see, cash forecasting and FX risk management, number 1, number 2, nothing has changed there. Now, why cash forecasting is number 1, we think there are a couple of factors about this. It's iterative. It's something that never really gets done. When we talk to the treasurers, what they're telling us is they're refining their process. They're not even doing radical rebuild, some of them, but just refining. It still keeps it high up on the priority list. Some of them are constantly making it better and better. One treasurer said, hey, we finally got our rolling 18-month forecast to a really good level. Now we're going for the 3-year forecast. One treasurer said, well, we actually overcomplicated our forecasting process, so now we're going back and decomplicating it and simplifying it. It's something we're always tinkering with. The business model changes in our company. One treasurer said, we've really gone from being 100% wholesale distributor to where we're now 33% retail. The forecasting has gotten more complex. We've really had to adapt. We still have data challenges in forecasting. Somebody mentioned the fact that their international offices have the accounting people submitting the forecast information, and they simply just don't do a very good job, so it's always a challenge getting those numbers right. There are lots of things that keep forecasting high on the list. And why is FX management still number 2? Well, as Tony will talk about, and as we heard from a lot of treasurers, this business of the euro rising against the dollar seems to be foremost in lots of people's minds. They expect that rate impacts for this will factor into their capital funding decisions. They expect to have more focus on earnings protection due to the weaker dollar. So just what's going on in FX is keeping it front and center. We love to see Treasury management systems high up on the list because that's something we help lots of companies with. This doesn't have to be I'm putting in a new system. It could be I'm adding a bolt-on. I'm tweaking what I've had for a couple of years. We're going to do an upgrade, something involved in keeping the Treasury management system current, which is a good idea because it's one of your biggest investments in Treasury. You need to invest in that periodically. Functional organization could speak to people's concern that we're going to have a tightening job market, and we might have some turnover in our Treasury functions, especially with retirements as well. And finally, balance sheet optimization. As we interviewed treasurers directly, saw a lot of discussion about this due to tax reform. Lots of people are saying, so this is a great opportunity to clean up our balance sheet, or it might be better to invest. Some companies who have spent the last couple of years cleaning up their balance sheets, nonetheless are saying tax reform is giving them a lot of new options. And some companies that are pretty debt heavy are saying tax reform is really going to alter their capital structure. So I think that's why that item is high on the list. We also ask in our survey about benchmark desires for the coming year. And this is kind of equivalent to saying, where could your Treasury best use comparative data to help with the things that you're focusing on? And front and center on this list, again this year, is bank service fees. Tony will talk in a second about a new product that we've introduced this year called In-Depth. And I will simply say, as we've been in the marketplace with this new product, there is insatiable appetite for benchmarking data on service fees, just insatiable. The staffing level and service sets item, I think is again coming into focus, probably because of the labor market, probably because of the boomers retiring. We're going to have upheaval in our Treasury departments, staff-wise, and this is something that we're going to be looking at. Best practices is a perennial favorite just because that's a great benchmarking topic. We talked about financial risk management, and bank relationship management, again, ties into something Tony's going to talk about with increasing bank pricing power. If you need help with some of these items, again, these are things that Treasury Strategies consults with very often, so we're happy to help with that. Now I'm going to turn it over to Tony to talk about some of those current issues that will affect us this year.
Well, thank you, Kathy. And those are some interesting priorities that our clients describe for us: cash forecasting, foreign exchange, bank service fees. When we think about back to the future, this year looks a lot like 2005. And as we think about the challenges in front of corporate treasury, we put them in three major categories: markets and rates, payments and technologies, and bank operating services. So we'll structure the next little part of this conversation around those three topics. Let's begin with markets and rates. Again, like in 2005, we see rates rising, although the European Central Bank held firm this morning. There's uncertainty about inflation, markets are rising, and central banks are being very active in monetary policy. All of that sets up an interesting and challenging framework for corporate treasury. You must execute and organize to take maximum advantage of this environment. For example, with the rate environment, you obviously need to watch this closely. The U.S. has announced several rate hikes in the last year and a half and is predicting even more in 2018. Whereas the ECB has just decided to hold flat. So we see in different jurisdictions different movement, and you need to organize your Treasury Department in 2018 to both stay on top of those changes and then insulate your income statement or your balance sheet or whatever is appropriate against those movements. The central bank unwind. In 2005, central banks around the world were active in monetary policy, and all the rules were broken in 2008 with the financial crisis. The central banks became hyperactive, have trillions of dollars on their balance sheet, trillions of dollars of intervention, and all major central banks have announced either a tapering of that intervention or actually an unwinding of that intervention. That will cause massive currency flows around the world as the central banks either coordinate in the sort of deflating the balance sheet bubble that they've created, or not coordinating, which would create even more volatility. Again, your team needs to stay on top of that. Money market funds, which used to be the prime cash management tool of most corporate treasuries, may actually make a comeback. The SEC really put the kibosh on this by requiring prime funds to move to a fluctuating net asset value. In the U.S., a bill has just cleared the House Financial Services Committee in Congress that will reinstate for certain classes of investors the constant net asset value money fund. Should that come to pass in 2018, that certainly opens up a lot more strong and stable investment opportunities for corporate treasury. That's something to keep an eye on. LIBOR, my God, what's happening here? Trillions, hundreds of trillions of dollars of derivatives, in fact, are priced off of LIBOR, and the powers that be are thinking of phasing out LIBOR by 2021. There may be other substitutes for that, but the important thing for you in your Treasury organization is to make sure you understand which of your contracts are indexed off of LIBOR, and to make sure you insulate yourself or prepare yourself for any changes in LIBOR. And this is certainly something you need to talk to your bankers about, or your outside consultants, for that matter. The final issue we have here under markets and rates is the recent U.S. tax reform package, which frankly impacts all companies in all jurisdictions because of the global reach of most companies these days. There are two items here that are important. One is the deductibility of interest. Because not all interest may be deductible by corporations under this U.S. tax reform, that certainly will cause a major rethink of corporate balance sheets. If you can't deduct the interest on your debt, then why have the debt? Isn't there some better way to fund your balance sheet? That will cause a lot of sharp pencils to come flying out. The second is cash repatriation, and the conventional wisdom in the U.S. when this regulation was passed is corporations will move hundreds of billions, if not $1 or $2 trillion, out of non-U.S. jurisdictions and back into the U.S. Frankly, as we talk to our clients, particularly mid-sized and larger corporations, the conversation seems to be that the tax reform package in the U.S. frees up cash from where it is currently stranded, but doesn't necessarily insist that that cash come back to the U.S. And many of our clients are now seeing this as an opportunity to figure out where in the world they want to place this cash. So it's not simply one direction back to the U.S. Both of these, however, get to what Kathy was talking about earlier in terms of balance sheet optimization being a priority, and one of the reasons we saw it move from number 9 to number 5 in the rankings. So a lot going on in markets and rates. There's also a lot going on in payments and technologies, and you will have to deal with this in 2018. You know, back in 2005, there was a lot going on too. We were talking about EDI back then. We were talking about automating supply chains. We were talking about mobile, and interestingly, 2005 was 3 years before the iPhone was introduced. So, you know, it's amazing how far things have moved in a dozen years. But in 2018, there are actually some serious items on the table. The first is the blockchain technology, and while we're not going to go into detail here about what blockchain is, suffice it to say that it is a very secure and anonymous way of record keeping around financial transactions, and it could underpin the way payments are conducted in the future, whether you believe in cryptocurrencies or not. Most major banks have task force that are looking at the blockchain technology, so it's likely to come to a payment near you very soon. You ought to talk to your banks about that. Cryptocurrencies are all in the headlines. You know, we've seen Bitcoin go from 0 to 20,000 and back to 10,000 and back up to 18,000 and down to 12,000 again. And you say, what the heck's going on here? Well, the interesting thing about cryptocurrencies is that, you know, using the blockchain technology, they are anonymous. And they're also, that makes them independent of central banks or governments. One camp argues that because they're independent of central banks, they're not backed by anything. And the other camp argues that because they're not backed by central banks, they're free to find their real value without political intervention. Jury's still out on that, but this is definitely something you need to have on your radar. And in fact, just 2 weeks ago, we received our very first call from a client who had received Bitcoin and needed our advice on, like, now what? Which is kind of interesting. And the last item, just 2 weeks ago, I don't know if any of you saw this, but Eastman Kodak introduced plans or announced plans to introduce Kodak coin, believe it or not, and its stock soared 120% in one day. It more than doubled in a single day when Kodak announced, heck with this film stuff, we're into Kodak coin. Digital technologies, this takes us far beyond mobile. And it really will impact the way you receive, move, and store information, and really bring a lot of efficiency to your operations if you take advantage of the digital capabilities that will be becoming available for you. And then finally, cybersecurity and fraud. We're now at the point where we're beyond just phishing and social engineering scams. I think everybody's aware that the King of Nigeria doesn't want to send you £7 million into your account in, Zimbabwe or whatever. Well beyond that, and frankly, the concerns here are much more serious today, and the scams are much more sophisticated. One of the areas that we help our clients with here is not so much on how you organize your IT function to prevent hacking and fraud. You've got scads of folks who are already doing that for you. But in terms of Treasury, this is about Treasury policies. If you look at the major frauds where corporate treasuries have actually lost money, it's because of either the policies were lax or the enforcement of those policies were lax. Documenting, we work with clients in documenting their Treasury workflows to make sure that those workflows are airtight, and should someone penetrate a system, that can easily be identified and handled, and to the extent that that's automated in your Treasury management system, so much the better. And then finally, employee awareness. The first line of defense in cybersecurity and fraud prevention is employee awareness. Now, the final area of the three we wanted to talk about today are bank operating services. And here I think we are in for a sea change. The pendulum is clearly moving in favor of banks in terms of the corporate bank relationship. The primary driver there, particularly in the U.S., but we soon think this will be global, are increases in interest rates. Basically, bank services, bank transaction services, help you optimize your cash flow and get your cash to its highest and best use more quickly. Higher interest rates increase the value of those services because the value of getting your cash optimized more quickly increases as a result of interest rates, better cash utilization. So we think this puts the wind at the back of the banks in terms of service pricing. In addition to that, during the financial crisis, there were a number of new regulations and that have been imposed upon the banks and the way banks execute transactions. Banks have borne huge costs, which have yet to be recouped, and ongoing expenses in terms of monitoring transactions. You've all read about the billion-dollar fines that several of the large banks absorbed because a transaction slipped through their fingers. A stronger economy will enable banks to begin recouping those costs through price increases. Similarly, earnings credit rates, I'm sure if you're on this call, you probably know that an earnings credit rate is basically an allowance that a bank gives you for keeping balances on deposit. As rates rise, this becomes more important. In a very low rate environment, it didn't matter much, but through our in-depth product, we are seeing from our clients here a very wide range of earnings credit rates that exist today as we speak this morning. And we're issuing our client reports for the past month. We're seeing a 100 basis point spread between the highest and lowest earnings credit rates the banks are offering their customers. Clearly, it's important to get on top of that. That's a huge difference. Balance assessment fee. This is a way that banks recoup some of their balance sheet charges for the balances that you put on deposit. As we found in our in-depth product, this is news to most folks, and clearly something that you ought to take a look at in 2018. And then finally, transparency and the push for transparency. So Kathy mentioned earlier that we introduced this great new service to add transparency to bank account analysis statement called In-Depth, and just in our first year, we've added 90 corporations to our client list here. And if you'd like some information about that, in the QA box in the bottom right-hand corner, just type your name now, and we'll make sure you get that information. So, to put a bow around this, markets and rates, payments and technologies, bank operating services should be the three key themes for your Treasury in 2018.
Okay, on to our third topic area, which is Treasury strategic focus. Now, this is, many people might consider, the fun part of what goes on in Treasury. Every Treasury puts its pants on one leg at a time. You got to cover the essentials every day. You need the cash position. You got to do the bank account and bank relationship management. You got to handle debt and investments. You have to do risk management. But in addition to those everyday essential things, you have to make time for the strategic and think about how these things can align with your corporate mission and objectives. And that's where you start to really get some traction in Treasury, is when your strategic initiatives and activities are lined up with what the company has said is its strategic objectives. The problem here is time. And here's a little grid that I use to think about time, and I just want to mention this for a second because I think it fits Treasury really well. And we've got increasing urgency on the top of the chart and increasing importance going down the vertical axis. So in the pink box is stuff you don't want to be doing at all, not important, not urgent. In the blue box, not important and urgent, you got to ask yourself, you know, do you want you or your staff involved in those things? Our focus needs to be on the green and the orange boxes. Important but not urgent, and important and urgent. And the problem and the challenge in Treasury is so much of our daily lives ends up in that orange box. Important and urgent. And of course, our daily and weekly essential things are in there, but also when there's going to be a refinancing, it is going to be important and urgent, and it's going to take all of the capacity out of the Treasury group for some period of time, as will dealing with an acquisition, as will your quarterly earnings report preparation and delivery. So there's lots of things that go on that really can make that orange box take up everything we've got. And the challenge is to make room for the green, make time for the green. And okay, if you did make time for the green, what would you do with that time? So when we talk to treasurers in our in-depth interviews, we ask them what are their strategic issues for the year. Here's a sample of what they said to us. We're changing from a centralized to a more regional Treasury structure to reflect the changing nature of our corporate structure. We're going to be modernizing and improving our payments experience. We're really thinking hard about how to get cash out of China. We're looking at robotic processing and how that can be used in Treasury. Doesn't that sound interesting? Several people talked about data as part of their strategic initiatives in Treasury. Analytics, what is the power of what's in our data? How can we use data to detect and prevent fraud? One company said, our senior management love data. We have to figure out how to feed that love. Another company said, we've got to get good at managing investments again. Another example was somebody who said our strategic focus is going to be on e-commerce and equipping ourselves for card-based payments. So you can see from those examples, it covers a spectrum. How would you do this if you don't have some strategic Treasury topics and issues for the year? How do you do this? This is something we help a lot of our customers with. One focus is to start by looking at your corporate mission and objectives and see how Treasury things can possibly fit in there. Now, you might initially say, there's no way. I mean, they're talking about very high-level things. Well, as I look at companies' annual reports and look at their missions and objectives, I often see ways that Treasury activities can dovetail with this. And two of the most common are payments and digitization. And just very quickly, I want to say, whether you're B2C or B2B, payments involves looking at what the customer wants in terms of payments, what your competition is doing, and how alternative payments can benefit your company. One example is in insurance. Some of our insurance customers have experienced this, where changing to allow premium payments by a card instead of requiring every customer to write a check and put it in the mail actually increases renewal rates. And if you think that isn't strategically important for an insurance company, think again. It's huge. So payments can be a very important strategic area. Then digitization, Tony mentioned this. Either you're working for a company that was born digital or you're not. And if you weren't a born digital kind of company, you're competing against born digital companies, and you have to ramp up. And I bet you that is in your company's mission statement if you're not a born digital company. A digital experience that ends up with somebody receiving a paper invoice or writing a paper check isn't a fully digital experience. Treasury has part of a lot of these kind of very significant initiatives. And don't overlook that. That can be part of your strategic focus. Again, if you need help with this, this is something we can help with.
Great, Kathy. So aligning Treasury objectives with the company's strategic mission is absolutely critical. Certainly the one way that you earn a seat at the decision-making table inside your corporation. This is a challenging concept for a lot of our clients, as we see when we begin an engagement. So let's take a minute and do a little exercise to see if we can help each other out here. Think about things that are on your list for 2018 that specifically line up with your company's overall mission, what your CEO said in the shareholder letter, or what your president said in the latest town hall meeting. And if you could, what we'd like to do is collect that and anonymize and share that, share your own priorities with each other here on the line. In the Q&A box in the bottom right-hand corner, just take a second and type in one or two things that you plan to do in 2018 that specifically align Treasury with your company's mission. Type it in the box now, and we will compile these and anonymously share them with everyone who does choose to type these in the box. So we'll wait just a second here and give you a second to type in one or two ideas. While you're doing that, let's do a little commercial for Treasury Strategies here. And take 15 seconds to let you know that we appreciate you joining the call this morning, and very much would like you to consider us to be your external consulting partner in Treasury. We consult in Treasury policies, organizations, structure, banking. We help companies select Treasury technology and implement that technology, and our new in-depth product provides transparency around the entire bank service fee and bank relationship arena. So again, Phil, take another second here, and let me remind you that everyone here on the call will receive an executive summary of the report, the survey that Kathy referred to, that will actually list all of the priorities, not just the top 5, and we'll send you a copy of this deck as well. And by all means, please call us. So again, thank you for joining us this morning. Give us a call and let us help you make 2018 your best year ever.
Thank you.